What's up? Good morning. How we doing, guys? Welcome, welcome. We are live, baby. We are looking at a 5-minute NQ chart. This is the December NQ contract. We're trading Nasdaq futures. And again, this is a 5-minute chart. The numbers below the bars are counting every other bar since the New York Open for sake of going back and referencing the bars and commentating along with the bars. What's up, guys? Welcome. Let's get to work. We are 60 seconds approximately out from the close of 11. Let's do it. AB, what's up, brother? Sergio, how we doing? Derek, good morning. Niles, good morning. Scott says gold is on fire, huh? Scott, you better not be lying to my ass. Ooh, you weren't. ATR 7.7. Big ol' shrinking bull body. Might enter a trading range. Back to NQ. All right, 11. What you got? Now, I think that NQ might also be entering a bit of a wider trading range. We will see if this becomes a thing. That's about what? 80, 85 point wide trading range? Let's see if that becomes a thing. And if it does, we will have to look. I'd love to see a break downside. Two, three consecutive bear bodies with at least one sizable, if not two, closing outside of the range without a doubt would be a nice little bet on the bears for me. Till then, do not bet on the range breaking. On every single test, there's a 20% chance that this thing breaks. On every test. So 11, 80% chance it just stays in the range, right? 8, 80% chance. Well, I guess not 8 because that was our second test. 9, 80% chance it stays in the range. Do not lose sight of that. It'll chop you up. I've made that mistake plenty of times. Don't lose sight of context, right? Number one pillar, tier number one before setup within the RAM framework is context. If you forget context, it's all fucked. You're gonna get chopped up, man. Don't want to see that. AK, what's up, brother? How we doing? Bruce? Levi, Roland, how we doing? Caden, good to see you. Rose, good morning. Seth, how we doing, big dog? All right. All right. Well, you know, the market, I gotta say, it hasn't been bad. You know, because what's bad? Bad would be an ATR of like 7 with all wicks. That would be bad. The market has been fruitful, but as far as trade count, the trade count has been low. My average amount of trades per day, 3 to 5. At least in the morning, I mean. Like on stream. And lately it's been about fucking 1, 2 if we're lucky. So we're going to get back to a little more action here. The market will, I don't want to say clean up because it's not necessarily so dirty. Just a little weird. But fruitful. But slow. ATR currently sitting at 39, which is good. We got an ATR here. What is it? It's the average true range. It's the average range in points of a 5-minute bar. So I look back 10 5-minute bars. That gives us an ATR here of 39. Anything above 20 here on the 5-minute NQ chart is doable. Below 10, it's time to walk away. Above 10, you can still catch some scalps here and there, but the edge starts to fade a little. Still there, starts to fade a little. during the New York session, at least, when the ATR is below 20 but still above 10. Above 20, things are pretty normal. Above 30 is ideal. 40, 50, 60, even better. So we're sitting good on the ATR. Now we just need to see if this range becomes a thing. All right, well, we know that this trading range is there, right? So let's get ready. You're on 12. We're inside the range. 23. Hold up. Fuck. All right, I think we're good. All right, we're 10 seconds. Got to get the copy trader ready to rock. If we can get a nice close out of this bull body above the wick high of 11. Nope, next bar. No trade. Next bar. Let's watch 13 here. All right, now if 12, I get it. You know, some of you guys are like, well, what the fuck were you going to do, dude? I think sometimes I kind of make the assumption that most of you kind of know what RAM is already. At least the basics. And I shouldn't make that assumption because obviously that's not necessarily true. Had 12 closed above the wick high of 11 and not grown a ridiculous degree, that puts us in the trading range, but the trading range is wide enough where it gave us 2 consecutive bull bodies. Now, granted, 11 is a small body, so 12 would be the early trade, quote unquote, but I'd take that and look for a push using a stop limit buy just above the close of 12 on the open of 13. Or I guess the wick high of 12 on the open of 13. I'd place a stop limit buy just above the wick high, look for a push up toward the high of the range, take profit as a scalp, like half an ATR, and then move on. But we didn't get it. We closed inside the wick high of 11. All right, acquired. Quick question, was bar 3 and 4 a bad setup for RAM, or was it fine? Bar 3 was a great setup for RAM. See here, that's about the first trade that I would think about taking on a day like today is after the close of 3 into the open of 4 short, using a stop limit sell 1 tick or as close as you can get below the wick low of 3. 4 was also reasonable. You know, if you guys know at this point, I'm not really interested in cherry picking. It's always really obvious when someone cherry picks. I don't care. Bar 4. Now the range on it, you gotta understand, was 85 points. So if you're willing to put on some risk, you would probably want to size down going into bar 4. You wouldn't trade, you know, at least not likely. You wouldn't want to trade the same size as you took on bar 3. You'd want to size down, and then bar 4 was another reasonable setup if you could get a fill within the first like 25, 30 seconds on the open of bar 5. Now, if you didn't get a fill, then you got to pull it. If you waited 3 minutes to get a fill, that's a bad trade. But if you got a fill within, 4 seconds, reasonable trade, just didn't work, and that's okay, but you would have sized down on 4 anyway, most likely. Listen, when the methodology works, you don't have to cherry pick. That's the benefit. Makes my life easy. Yeah, no, acquired. That's a really common question. All it does is downgrade it a little bit. It doesn't completely knock it out. I will take continuation setups that are bare body clean, doji, bare body clean, and vice versa to the bull side. But I'm not sitting there pretending they're A+ setups. It's like a B setup. Now, just because the close of 3 worked in a big way and made you a lot of money, if you took that, doesn't mean it was an A+ setup, right? I mean, you just can't lie to yourself in this business. You just gotta be real. 3 was a B setup, happened to work well. But again, you guys know, in funded accounts, I will take B- setups and higher. If something's like a C setup and pretty clearly not hitting that B- level, I'm not putting it on in a funded. But I will put it on in an eval, because in an eval, opportunity cost is too expensive. All right. So we talked about that trading range. If we can actually, the bears, and this is the trading range that we talked about. If the bears could just quickly turn this into a big wedge, break it lower, take out the flat, which if you end up getting a wedge like this, the probability says it's about 45% chance that it breaks this and about 55% chance that it breaks this at some point. Not on this bar, but at some point. So if we could get a break lower, that could set us up with a nice RAM short setup after probably 2 bars. Which would be nice. All right, 10 seconds out here from the close of 13. Let's see what we get. Cheryl made $400 last night. Thank you, RAM. Good work. Love to see it. All right, decent close out of 13, but obviously it's still an inside close. Within RAM, you would never short the close of 13. It's inside the wick of 11, inside the wick of 6, 5, 4. Bar I'm talking about. When I throw out numbers, I'm talking about the bar. So you would never short the close of 13. That's still within the range. If you're going to do anything at all on 13, you would buy it, though I'm not a big fan of buying that right in front of a flat bottom because I know the probabilities of flat bottoms. They have a little higher chance of breaking than that like descending level, again, in the wedge. So I wait for 14. This all becomes second nature at some point. You don't have to think about it, you just know. But if 14 can give us a nice break and a pretty decent push lower, and then close clean, I will put out a stop limit sell 1 tick below the wick low of this bar, which is 14, when it closes and opens up into 15, and then see if we can get a fill to the short side. There you go, bears. Good work. That's what I want to see. Now, 3 minutes out. If we could get a nice, clean close, all of a sudden I've got a job to do. I don't want to see that grow into some 130-point bar, though. Oh, by the way, hey, the Apex deal, the big one that we've gotten so used to at this point, 70% off, $40 PA fees, the activation fee, which it's $40. It's normally $140. And you can still pass in 1 day. Again, 70% off, $40 activation, and single day pass at Apex. That ends today. Last day here. Code BIG, B-I-G. Go stock up. We have no idea what's coming next. Nobody does except them. So as far as, all-in cost to funded, which is what matters, I get it. This isn't a 90% deal, but all-in cost to funded, this is one of the best deals Apex has ever run. That ends today. So if you don't have 20 yet, man, go load up. All right, we're a minute 25 out, by the way. Come on, Bears! Clean this up. No activation fee. That is Take Profit Trader. Same code big at Take Profit Trader gives you 40% off the top. And then when you pass, you pay nothing to get into the pro account. Normally, you have to pay $130 to activate at Take Profit Trader. With the code, when you pass, you pay nothing. Which is fucking crazy. Oh, Bears! Well, I don't want to miss anything. Let's pop over to the execution screen. Oh, you Bears. Right back into the wedge. All right, we have 3 minutes here till bar 15 closes up. All right, we're 2 minutes 20 seconds out. Now, we're in a wedge. There's multiple looks here. You could say, well, this wedge might just turn back into the trading range that I still have drawn. Or, we already tried to break the downside. Does this wedge instead turn into eventually like a soft bear channel? If we wanted to take the really, really early bet, which doesn't necessarily make the math look worse, it just makes it look different, probability and reward to risk. If the bulls close it like here, I could put out a limit sell and short it on the rollover, and then risk the wick high of 12. I could do that, since we did attempt to break it now on 14. Now, granted, the breakout failed, but we got through in a big way. This trade depends greatly on how you want to look at the context. Trading range or soft bear channel. Because right now, it's right between both. We're a minute 10 out. Let's see how 15 closes up. All right, let's get rid of all this because we know it's there. Okay, we're 15 seconds out. I gotta go ahead and get the copy trader engaged. We're in a trading range, but it looks to me like we're starting to be in the very early stages of potentially heading into a soft bear channel, which means on that rollover, I'm gonna short and risk the wick high of bar 12. There. And bring that way down. Now that is the very, very early version of that trade. Very early. Probability is lower, straight up. That's the way the math is going to work. But, you know, reward to risk starts looking a bit better here. Since we're so early. So I'll put the early trade on. Again, probability is not tremendous here, but that's okay. I'm willing to make that trade-off. That is all right. Because if I'm right about the soft bear channel, then the reward to risk will look plenty good to justify that probability shift, which I'm cool with. So bears, do it to them. Take this baby 200 points lower. There you go, bears. By the way, ATR 41. Now again, counter argument here is still that trading range, which takes us into the money to test the low of that trading range. But we're in the middle of a potential context shift. Let's see if the bears can take this baby down through to a full ATR. Because I can't go taking this off at, a third of an ATR the way that probability is on this trade. Math ain't math and it's not working. There you go, bears. Keep that pushing! This could be the struggle point, but I need soft bear channel. ATR 42. Trouble bears, lots of work to do. There we go. Need a little more out of you bears. Well, not the greatest close of all time out of the Bears, but I'll take that close. All right, ATR sitting at 40. Do it to him, Bears. Boom. There we go. Out there for better than a full ATR. Good trade. Little range trade. Scalp. But better than 1-to-1 on everything. All right. Moving on. Made $7,900 there. Good, good. Let's keep going. What's up, Jerry? Good morning. Outlaw, how we doing? What's up? We asleep? No one take that? Oh, gotta update the trade count, huh? What gave you the confidence that it was a wedge instead of a range? Well, I mean, listen, the probability gives me confidence. I've seen enough screen time to know that 60-ish% of the time that's going to turn into a soft bear channel, which it is. 15, see how it was a small bull body with a wick? See how 12 was kind of the first sign, small bull body with a wick? Now, you can make the argument that it's going to be a full trading range, but I'll be out above the wick high of 12 anyway, if that ends up being the case. 12 made it through in a big way. Bulls took it back in the range, but can't even make it back halfway without hesitation. I look at that and I say, I think soft bear channel. I'll take the early trade short to close a 15 into the open of 16, get a push back down, form the soft bear channel, which is exactly what happened. Now, that's not going to happen every time, but it doesn't matter, because if it doesn't, I just cut it above the wick high of 12 and move out my life. Listen, if you're going to trade RAM, the decision making is not that complicated. Just put in the screen time. You'll get very, very good. Your life will be stress-free. You'll make a lot of money. Okay, but you got to put in the screen time, dude. It takes work. You want to make a lot of money? Might take a little bit of time. Otherwise, why do you deserve to make a lot of money, right? If it was so easy to figure out, well, I think RAM's just about as easy as it fucking gets. Funk! It's my strategy. It's my methodology. The wrench action method. Just my price action strategy. Nothing extraordinarily new. It's not some insider big fucking thing. I'm not some creep telling you that I'm an insider. It's price action trading, kind of like rebranded, but in a new framework where I take pieces from everything, put it together. Oh, look, this becomes RAM. It's my own new thing. It's what works for me. It's what keeps the bills paid. It works for me, it can work for you. There's nothing special. Wiki close out of 17. Nothing there. Tom, been sizing down, setting stops. Very stress-free the last couple weeks. 100% takes the emotions out and trading way better. Tom, I bet you're making more money too, huh? Now imagine when you do the same thing that you're currently doing, but you start sizing back up. Scaling it horizontally. Oh, baby, it's over. It's over. Yeah, JP, I mean, listen, man. I struggled for a long time too, bro. You don't quit and you keep trying to get better, eventually you'll find something that works. Whether that's RAM or something else, whatever, dude. The point is to make money. Most people just quit, which is why the statistic in trading is so bad. It's not because it's impossible, it's because most people just don't fucking have it. There's no heart, it's just all greed. They want everything for nothing. And that's most people. When shit gets hard, if you fold, this business isn't for you. And it's gonna get hard in the beginning because you don't know what the fuck you're doing. If people would just use their head and think about this. Okay, I want to make, let's just be honest with myself, I want to make millions of dollars, probably more like tens of millions of dollars or more. This is you talking to yourself. If that were easy, I wouldn't, if this were simple and would take me 3 days to figure out, I wouldn't be able to make that much money because, like, high quality, high performing traders wouldn't be as in demand, so they wouldn't make as much money in demand. You know what I mean? Like, if you take an entry level job, pretty much everyone can do it. Most people can do it, right? So it's not going to pay that well. It's supply and demand, right? There's not a huge percentage of wildly successful traders on the planet, correct? So it's a small number of individuals making all the fucking money. Because it's hard, and it took them a long time to get there, and they didn't quit, and they kept going. So now they reap the benefits. It's not trading itself that gives trading a bad reputation. It's fucking weak individuals that give trading a bad reputation. Bad, however you look at it, right? I think trading has a great reputation. Because it is what you see, and I see opportunity. Four minutes. Yeah, I mean, JP, you're preaching to the choir. I get it, dude. I get it. I think people see traders who are, like, doing okay. And they're like, yeah, but you don't get it. If anybody fucking gets it, it's me, big dog, not you yet. I get it. But if you stop believing this is gonna work, what the fuck is there? What do you have? You have nothing. What's the point? I mean, listen. Either you got it or you don't. So either quit now or never quit. Fucking take your pick. Don't be half in. All right. Big Bar 19. What you got for us? So, tell me, in this Tradeify competition that a lot of people are doing, do you get to also keep the money that you make in the competition? Or is this just for prize money? the next phase you do. All right, inside close on 19, closing inside the wick low of 18, 17, 14. So nothing there. We move on to bar 20, 450 out. Let's see what we get. See how this turned into kind of a tightening, soft bear, almost wedge now. Yeah. All right, 20, take out that low. Take out that low and give us something. Well, let's check in. How we doing so far today, huh? In the chat, what's up? How we doing? You don't have to share if you don't have the guts. Halfway through bar 20. Terry Green, good work. Now, who's going to be the first? Everyone's green. Oh, everybody. Everyone here is green. Who's red? You guys see when I'm red? Today, I'm not, but when I am, you get to see me, so put it in the chat, man. It's only fair. A lot of people green, though, man. It's good to see. Billy, up 225, 400 bucks away from passing your second eval. All right, Billy, we'll see you in the tomb, man. See you inside. Well, ATR's still 40 here. We're just in kind of a single bar trading range. Again, kind of a big... We're kind of at the head of a big wedge, is what it looks like to me. So, bar 20, bar 21, we got to see some kind of resolution here. We are trading NQ futures. This is the December NQ contract, futures contract. So it's called NQ, but it's Nasdaq futures. And we are on a 5-minute chart. All right, big bar 21. $325 out. Let's see if big bar 21 here gives us something to work with. A nice clean close would be great. Two minutes. If the bears can keep this bar 21 here nice and clean. It's got to be clean. By the way, we're coming right into 25.5. Not that I'm so concerned with that level, but it is something to think about. All right, we're 26 seconds out. I do have to go ahead and get the copy trader engaged because bar 21 here is a nice clean bare body after 19 and 20. And again, we are coming into 25.5, which also is near yesterday's low of day. But if it's a nice clean close, I am trading price action. I don't want to see that much wick. Oh, you bears! Whole bunch of babies. All right, let's wait on 22. See that insecurity last second out of the bears? They're like, I don't know. So we hold off. We let bar 22 do its thing. All right, well, back in 2 minutes. Up $7,900 right now. Let's see what we can get from here. Back in 2. Don't go anywhere. All right, welcome back. Just in time. Think that's a coincidence? We are 2 minutes out from the close of Big Bar 25. And we might have something here. So let's see what we get here on Bar 25. Obviously 24 closing inside of this, inside of the 20 EMA, first test of the day of the 20 EMA, so we do have to consider it. Can't be buying the close of 24. At least not yet, that's a little too early. Minute 15 out. Victor, copy trader, I use the Affordable Indicators copy trader. I have always had very, very big trust issues with copy traders. And this one has just about healed me. I like it. All right, 30 seconds out here. Bull's getting a little insecure on us. Whisker! Let go of 4 indicators on my main chart in the last month. Watching. It's amazing how much I don't miss them. Yeah, get rid of the indicators. ATR to me, on the bottom there, that's not an indicator, it's just kind of a heads-up data display. The only indicator I have on my chart is the 20 EMA, which I don't even really need, but I put it on so I don't get dizzy, and, you know, to keep me out of trades like 24. So even without the 20 EMA, I wouldn't have taken 24. I'd be waiting on 25. So I can do with or without it. You want to swap that out for VWAP? Great. A lot of you guys spend too much time thinking, which indicator should I put on? Should I use VWAP? Should I use the 10 EMA, the 50 EMA, the 20 EMA? Dude, just go. Just move. You're too fucking slow. Move. Go. It doesn't matter. Just trade price action. If you're trading RAM, pick one and go. For the longest time, everyone was like, Nico, why don't you use VWAP? It's like, I do on stocks where it's more relevant. Is it relevant here? Sometimes, sure. Is the 20 EMA relevant? Yeah, sometimes, sure. Is it too relevant? Sorry, is it more relevant than the straight up price action in the context of the day? Not even close. Just start. Move. Fastest trader wins, not the smartest. Smartest trader doesn't win. Whoever moves the quickest wins, makes the most money. Go. Yeah, I mean, Brad, it's fine. I mean, I mentioned it. I mentioned it on bar 21. Yesterday's low. But you guys, I think you guys, listen. If you're trading something where you have to, you know, consider yesterday's low, last month's low, fine. But you got, a lot of you guys are trying to trade RAM, and you're trying to overcomplicate it. probably as some kind of like weird psychological protection mode. Like, well, if I overcomplicate it and fail, then I still have the simple version to fall back on or something. I don't know what's going on. Listen, you don't need to overcomplicate these things. The price action and context takes enough screen time on its own to finally kind of get it. If there's a beautiful price action, RAM continuation short setup heading into the previous day's low, am I going to put it on? You're fucking right, I'm going to put it on. I don't care. The price action is now. Yesterday's low is yesterday. Are people watching it? Yes. Yes, there's always a counter argument to every trade. Every single trade. If there wasn't, you wouldn't be able to get in because no one would, buy it from you if you're looking to get short. Yeah, Nords, I don't know what the fuck you're talking about, dude, but straight up, I'm good at this. It took me a long time to get good at this, and there was a lot of pain involved, so I now have a skill that's in high demand. It would be the most selfish fucking thing on the planet for me to sit like a hermit, not stream, not start the tomb, and offer it. You don't have to fucking buy it. In fact, don't if you're gonna have a bad attitude. I don't want you there. It would be selfish as fuck for me to sit in a room by myself, make all the money trading, and never tell anybody. I needed somebody to tell me how to do this. You understand? And yeah, I supplement my income with the tomb by working with people. Fucking sue me. Get over it. I also make a lot of money trading. Fuck! Getting me all worked up. 344 out. Come on, 27. All right, let's see. Bar 27. Come on, 27. Give us a little growth. Let's get a little cockiness going here out of the Bears. All right, 27, we got something here. Now, of course, the counter argument is, hey, maybe this in and of itself turns into a soft bull channel. Right? That's the counter argument. Well, let's see what we get. All right, should we do it? Let's do it, baby. 26 seconds out. Copy trader. Engaged. We get a nice clean close here out of bar 27. Then I have got a little present for the Bears. See what we can get. There we go. Stop limit sell. Out. Boom. Place that guy as close to the low of 27, the wick low of 27 as we can. And I'm going to give that guy 25 seconds to give us a fill. Why 25, not 30? Just because it's slightly downgraded because of our 26 and 25. If 26 closed below the wick low of 25, I would give that the full 30, but I'll give it 25 here. 5 seconds, no fill, no trade. Let's see. No fill, no trade. Moving on. Next bar. Nah, do it, man. Hey, listen, anyone who has experience in the market, share it. We need more. We need more people talking about what, their experience in the market. Do it. You might say something in a way that someone needs to hear, in a way that I can't say it, because that's not me. The same way that, the way that I say something, someone might be like, oh, see, he talks like me. The way he said it the way I needed to hear it. You might offer that for somebody else who doesn't get that from me or anyone else. If you have experience, even you make a little bit of money, especially if you make a decent amount of money, man, talk. Talk, talk, talk. The least selfish thing you can do is talk. All right, 28. Let's see what you get. Nice bar here out of 28. Wired, appreciate you, big dog. Damn, Bears! Barely taking out that wick low of 21. This is an outsized bar. That is top 4 of the day in terms of range. Alright, what's the range on this thing? Okay, we're 38 seconds out. Now, the range on this bar is about 80 points. I gotta tell you, to me, this is a soft bear channel, but it's really soft, right? It's really soft. We're getting a lot of bull relief through this thing. So the question I ask myself is, you know, we're getting a wick back here. It's pretty expected, actually. But if we had a nice clean close down here, even beneath the wick low of 21, you know, if you put it on, I wouldn't be mad at you. But what I start thinking is, with the context of soft bear channel, can I really expect to cover my risk of 85 fucking points on all of a sudden we get a huge push downside? Not within reason. So even if we had gotten a setup there, I'd have to wait for bar 29, but we didn't. Big wick back, which tells me I think the bulls are seeing that anyway. Interesting. All right. Ram is worldwide, baby. Spreading dollars coast to coast. Fucking cross the planet. Gotta love it. Wifey is in the chat. Say what's up. Yes, good catch. The short below 27 would be good. I gave it the full time though and didn't get a fill. If you rewind the stream, maybe 5-10 minutes, 7 minutes, I don't know. I tried to put it on, didn't get a fill, so it's no fill, no trade. All right, 90 seconds out from the close of 29. A lot of nothing. You heard the missus. Hit that like button. What you doing? Yeah, Kurt, you can join the free Discord. Join the free one. Come hang out. And then also the sauce, though, is in the tomb. All right, well, our trade so far today, I shorted the close of 15 into the open of 16. And we have not missed anything at all since then. I tried to short the close of 17. Good setup on 17. Beautiful setup on 17. 27. Not 17, 27. I tried to short the close of 27 with a stop limit sell, one tick below the wick low on the open of 28. And I gave it, the full 25 seconds that it deserved. Just didn't get a fill, so it was no fill, no trade. So we have missed nothing. Let's see what bar 30 brings here. Yeah, I mean, look, any trader's Discord probably that you join, like free Discord, right? Mine's no exception. When you join the free one, you're probably gonna get a DM from a fake Wrench Capital. Don't worry about it. It's not like dangerous or anything. Just don't reply. Just block them. There's been a dude, or multiple, pretending to be me for years to scam you out of crypto. And the funny thing is, I'm not even really a fan of crypto. I will never DM you first on Discord unless you win a giveaway here on stream. Yeah, I mean, crazy as hell. Imagine getting up every day and pretending to be another man to steal money from strangers. Fucking crazy. Hey, option! Yes, sir. Learning RAM has taken me from break-even to profitable. Good work. Fuck, I love to hear shit. Love it. That's the point right there. Minute 20 out. Come on, bar 30. All right. "15 seconds till the close of big bar 30, baby." Yeah, Chad, I think you're right. I think we might be entering a sideways trading range. This soft bear channel might have gotten so soft that it just turns into a sideways range. We will see. Kind of starting from 21 here, I'll draw it for you. This is why it's important to keep a fresh set of eyes. I mean, right? You could draw it like this and be totally correct. Nothing wrong with drawing it like that at all. Which means this market's got work to do. Now, luckily, it's wide, about 100 points. Pat, so, well, all you guys, so when we're in a trading range within the RAM framework, if the trading range is wide enough, if it's like 120 points wide or something, and you get a continuation set up inside of the trading range, but there's room, you can take continuation inside of a trading range. But with it under the range umbrella, because context is always the #1 tier within the RAM framework. Again, RAM stands for the wrench action method, for those of you guys who don't know. Tier 1, what's the context of the market currently? Does it fall under the range category or the trend category? And once you determine that, if it falls under range, again, if it's wide enough, you can take continuation inside of a trading range if it's wide enough. But if it's, you know, relatively tight, or you're not getting those continuation setups inside of it, you're really looking for, ideally, the best range setups are shorting bull bodies that close in the upper third of a soft bear channel and buying bear closes that close in the lower third of a soft bull channel. Those are going to be your best performing setups in a range, at least reversion setups within RAM, okay? The probabilities, straight up, get a little bit worse when it's a sideways trading range, because it's more like 50-50 in terms of which way will this thing break, right? But those will very likely, under RAM, be your best performing reversion trades in the range context. Rexer passed another 2 evals today. Good work. Oh, and by the way, when you're trading those range setups, those two that I just laid out, there has to also be kind of an obvious wick that you can use to manage your risk that is within reason compared to your expected potential reward. So when I sold the close of 15 into the open of 16 to get short, I used the wick high of 12 as my risk management. I put my stop 1 point above the wick high of 12. And then looked for a full ATR, which at the time was like 40, same as now. Yeah, you know, RAM's it's not complicated. It just, you know, takes some development of context understanding, and then the more screen time you put in, I think you're gonna get pretty fucking good. Of course, not every one of you, because a lot of you guys are gonna quit. Straight up. But if you think the way that I do, which again, not all you will, but if you think the way I do, you want to do logical things, you think in terms of probabilities, more or less, maybe not exact numbers, but like general probability, and you're like, yeah, that makes sense to me. I want to treat this like the same business model that a casino is running against the player, because that's what we are doing. Then I think RAM's probably going to click for you. It already has clicked for a whole bunch of you guys, which is fucking awesome to see. What's up, David? Welcome, brother. Again, guys, hey, quick heads up. The Apex deal, it is one of the best they've ever ran. I mean, it's 70% off, $40 PA fees. Again, those $40 lifetime activation fees are normally $140, and you can still pass in 1 day with code BIG, B-I-G, at Apex. That ends today. All right, so again, we don't know what they're going to run next. Are they going to have a 90% off for Black Friday? Yeah, probably. But when they run 90% off at Apex, the lifetime fee is probably not going to be $40. It'll probably be $85, which is what they typically do when it's 90% off. So, you know, is that better? I mean, it depends on the account size, but I don't know. At that point, you're kind of tripping over like 10, 15 bucks. And like I always say, I mean, whoever moves the fastest wins. The guy who's like, I'm gonna wait 3 months so I can get my fundeds for $10 cheaper. Sorry, dude, I don't think that's the right mentality. You gotta move. 3 months is a big chunk of your life, let's be real. All right, 32, bar 32 that is. I mean, again here, I hate having all these lines drawn. The reason I have to, though, is because there's multiple arguments right now. You could draw a soft bear channel and have that be super reasonable, but you could also draw a sideways trading range and also have that be super reasonable. Now, the difference here between me selling the close of 15 and this close coming up in a minute 55 is that 25 wicked above 16. Or I'm sorry, was flat. It did not wick above. It was flat with basically the wick high of 16. Okay, whereas 15 was a notable step down, which at that time, since we had broken through on 14 and given a real run for the money, and then the bears tried to take it in, lost steam, I shorted 15. Here, the bulls are not really losing steam the same way, and 25 showed a little more confidence. And now that we're lower in the day, deeper into the day, time-wise and price-wise, we're seeing some more relief out of the bulls. So it wouldn't surprise me if we just see this thing go sideways. Again, this is context and screen time. But of course, we're just dealing in probabilities. There's no certainty there. That's just what it looks like to me. All that to say, I'm not going to short the close of 32, is what I'm trying to tell you. Fucking right, Leo. Now watch this thing dump 300 points. Say, damn, probably should have shorted that. 20 seconds? Yeah, there's nothing there anyway. All right, so we wait on bar 33, see what we get. Big old gravestone doji out of 32. By the way, these gravestone dojis, you know, you can short them if you want. That's not really a RAM strategy. You're kind of stepping outside of RAM, which I don't like to do. But those gravestone dojis, you know, is there a little edge in shorting a gravestone doji in the upper third of a trading range? Sure, there's a little bit. But it's not like the best that I can find. Okay? And the problem a lot of times with a gravestone doji is for it to be a gravestone, which is what 32 is. For it to be a gravestone, it has to suck back, deeper back into the range. Otherwise, it's not a gravestone, right? And you're getting kind of a worse price. It's not so much in the upper third anymore. So I like to pass on them, but there's a little bit of edge there, maybe in the right context, but not enough for me to put on. Yes, the numbers below the bars are, it's counting every other bar since the New York Open. So that helps us talk about the bars much more easily. All right, Nico, do you use the profits on one trade to leverage the second, third, trading 1 to 2 micros on a 50K? That is known as, correct me if I'm wrong, that's known as reverse martingale, where every time you win, you size up, and it's a flawed strategy. I do not do that, no. No, the math on martingale and reverse martingale is flawed because everything is an individual event. Now, regular martingale, like let's say like you're at, you know, roulette or blackjack or whatever. Regular martingale in a casino would now listen, please listen very carefully. There's like 400 of you here. I don't want even one of you to take this the wrong way. Regular martingale theoretically would work if you had unlimited money and the casino never, ever kicked you out or capped your bets. But if you had unlimited money, why are you gambling? Right? You don't need any more. You have unlimited money. Martingale in the real world, trading and gambling, which are two very different things. It doesn't work. It's flawed because you eventually, certainly mathematically, you eventually break up. I'm sorry, you eventually blow up. It's a certainty mathematically. You blow up. And you know, I get it. I know the mentality behind martingale. I get it. You know, you think, you think, we all think this way because we're all human. We're all wired, you know, especially if you're here. If you hang out on the stream every day, we're probably wired relatively similarly. Not to mention we're all human, right? To begin with. You know, you think about it and you're like, man, the chances of me losing what's effectively a coin flip 7 times in a row, that can't happen. It does. It does. Take any loss streak at all, and there's a probability that it will occur. And if the sample size gets big enough, the certainty of that streak occurring just gets higher and higher and higher until eventually, if with a big enough sample size, that certainty is basically 100%. So you will blow up. Yeah, listen, the losing streak, it'll happen. It'll happen. And I'm not saying it'll happen like because of bad luck it'll happen. No. I'm saying mathematically it will come. Do not use martingale. It's flawed mathematically. It does not work. It only works in theory. And I will give it credit. In theory it does work, but in the real world it doesn't. It doesn't work at all because there's actual betting limits and you run out of money. In the context of trading, there's liquidity problems. You eventually can't trade more size, but even before you get there, you run out of money. And in a prop account, even before you get there, you run out of drawdown. And probably even before you get there, or maybe not, you run out of the contracts they let you trade. It's flawed. Do not use it. Skip over it. Go to price action. Promise you it's a waste of your time. If there was a way to mathematically make martingale work, I'd be using it. There's not a way, unfortunately. I wish there was, but there's not. All right, 34, come on now. By the way, for those of you guys like, what the hell's martingale? If you've never heard of martingale, it's a strategy where every time, if you were going to use it in the market, for example, every time you lose a trade, you double your size, you double your risk. And then once you win, you're back to square one. And then you win, you do nothing. You win, you do nothing. You lose, you double. You lose, you double again. It's mathematically flawed. It doesn't work. All right, 320 out. Two minutes here till the close of Big Bar 34. 60 seconds. Inside close, most likely here out of bar 34. Skeeto says, Nico, do you try to pass Apex 150Ks in a day as well? I usually try to pass any eval from Apex in an afternoon. Yeah. I'm not saying that's the way to go, but I'm saying for me, the opportunity cost is too expensive. So yeah. And again, I in evals on Apex specifically, let's say a 50K, just because the numbers are universal. Depending on volatility, I'll trade 1, 2, or 3 minis to start. I'll take a few trades, try to get myself 50, more like 75% of the way to passing, and then I size down into the finish line. As I invest more time into the eval, I want a higher probability that I actually get over the finish line, right? Because now I'm investing more time. My number one concern with evals is not money, and I don't think yours should be either. Regardless of like how much you got, really. I think your number one concern with evals should be opportunity cost. By the way, this all assumes that you have reason to believe that you have a positive expected value in your trading. If you don't, you got to acquire that first. That's okay. We all start without that. But once you have reason to believe that you have some edge in your trading, your number one concern should no longer be dollars that the eval costs. They're too cheap. Opportunity costs is number one. Now, don't gamble them, right? Take reasonable setups. But you don't got to sit there for 8 days. I think that's a bad use of your time. All right, guys. One trade today. Pretty decent day. I'm off to lunch. I will see you guys tomorrow morning. Hey, a lot of new people here. Subscribe to the channel. I'll be live again tomorrow. I'll see you there. Again, hey, reminder, the Apex deal, 70% off, $40 activation fee. That's normally $140. And you can still pass in 1 day. Code BIG at Apex. That ends today. So as far as all-in cost of a funded account, it is one of the best deals they've run at Apex. That ends tonight. Go hit that up. And I will see you guys here with a whole bunch more fundeds for you guys, hopefully, tomorrow morning. All right, if you don't got 20, at least, 10, 15. Load up, baby. All right, guys. I'm out of here. See you in the morning. Bye-bye.